Hello and welcome everyone to another weekly market commentary from StashAway. With us again, our Chief Investment Officer, Freddy Lim.
Hi there.
We have a few topics to discuss. There's some, developments in the political realm, as well as in the monetary realm as well. But before we get to these, let me quickly invite you all to our upcoming seminars. We have two different ones coming up. We have one on the 13th of November in Singapore, where we cover our investment basics. You can sign up for that via our website on stashaway.sg/academy. You can also go to our Eventbrite page as well as Facebook page. There's all the sign-ups, and you can find out a little bit more about what the event entails as well. And then on the 11th of November, we actually have an event in Georgetown in Penang, in Malaysia. So if you want to attend that one, you can go to our Malaysia website, stashaway.my/academy, or again, also sign up on Eventbrite or on our Facebook page as well. That one will cover investment basics as well as an inside look about StashAway, so you can ask as many questions as you want about us and learn more about how the app works and how the investment works inside of it. So that's for you to do in Penang. With the seminars all wrapped up, Freddy, let's go right into it. Let's talk about, Brexit was big last week when we spoke already, because he seemed to be losing or not getting his Brexit talk through. Now we are about to have a new election again, the third, I think, in the last 4 years. So maybe you can put that a little bit in perspective for people and tell us a little bit more about that.
I think it's 12th December.
I think that's what they're thinking about, right?
So 12. Ends up Boris Johnson managed to get his election.
Yes.
Well, the impasse or the hung parliament in UK is infamous by now. Nothing gets through, whatever the deal is, right? That's what happens when politicians are acting only on the interests of their own constituents, but not thinking as one nation. Now, the only way to break the impasse is to have a general election, and hopefully in this election, Johnson is hoping to consolidate more power.
Yes.
But if in the event that you actually have to work out a coalition with another party to maintain the voting power, then it becomes hung again.
Yes.
So really it depends on whether Johnson is able to acquire enough muscles in the election to really move Brexit forward. Either way, it's always smart for the EU side to just allow the postponement in the deadline whenever the UK wishes.
It looks good to them, right?
It looks good, benevolent, and could also end up that people have second thoughts as the more you delay. It's been 4 years of pain.
Yeah, I think this is the election will actually really tell, are the British people just over it and want to just get on with it? So are they going to go more power for Johnson so that he can actually push it through?
Yeah.
Or will it go the opposite completely, right?
Oh yeah.
And say, no, we're not want to do it at all?
Yes.
Or are we going to be hung again? I think this is, but this then, what, this is what...
Well, but my personal base case is that Johnson will get a better majority with the election, and that they will then push for Brexit in a more hardline manner, but the probability of getting a no-deal Brexit is actually low.
Yes.
Because if you think about the game theory perspective, the other side of the table, the EU, don't really want to put much terms on the table because the other side will never agree to anything.
Right.
And if you keep granting more privileges and then that never gets through, you end up losing your negotiation power. So now somebody can seriously negotiate with the EU if the election goes well for Johnson.
And I think there's not much more. It's probably he will just go with the one he just already got in place with the EU, right?
Or
like,
probably
go
some
through it,
but with minor modifications. Yeah.
But at least, if he comes back to the EU again with no power, then they're going to just say no, right? There's no point in negotiating anymore.
So from probably the angle, the disruptions of Brexit to the European Union and to the wider markets, very low. That's sort of my personal base case.
No, absolutely. Moving on across the pond. Big Fed meeting today. I think you saw that already. The markets have been doing actually quite well the last week. Earnings have been really good. Now what's the Fed going to do? Are they going to put a stop to the market, going up further by saying, no, we're not cutting interest rates, which everyone is expecting? Or what do you think is going to happen?
Well, let's start with what the market is pricing in. The market is pricing in about 67% chance of another rate cut by the end of this year. So if this meeting we don't get a rate cut, there's probably still one more chance in December.
Yeah.
Right. So, but since the market is so hyped towards a rate cut. If the market don't get it now, I think there could be a little short-term tantrums where it get pushed out, and maybe people start questioning central banks' willingness to support. Now, then, conversely, if you think about it, the market is doing well, so the central bank was looking well. Well, you're doing well, and do you need the support? So it's sort of a chicken and egg problem.
Yes.
At the end of the day, I don't think it matters for those with a long-term investment plan. It's just a blip in your journey.
Yeah.
It really don't matter at all.
No, just news item, right? And then meeting again next month anyway. Right? So we have the same thing again.
Central bank policies are designed to smooth the path of the economy and to smooth the downside of markets, or not to steer them to a specific direction. That's not what central banking policies are able to do. They're just automatic stabilizer.
Yep.
So really, worst case, we have a bit of interim swings in the market. But in the grand scheme of a long-term investment plan, they're just merely blips.
Yeah, and I think this goes right next to the thing. So we're moving on to kind of questions we always get, right? And this is actually, we haven't gotten it this week yet, but with the news, right, that the market is touching all-time highs this week, and we always hear this. We heard this 2 years ago. I heard it in my previous roles 4 or 5 years ago. It's still going up, right? Should I still, when should I deploy my money then? Should I then stop investing now and then pick it up again in a month or two? Or, we get this all the time.
Let me put it this way. There's always an average growth rate in the economy and hence in the market over time. Sometimes you have a few bad years, but over time, there's always this trend. So the market is always making new highs and you're always going to be worried. So that's a tough one to stomach. Two, I think that the cost of timing it wrong is extremely high. And this didn't come from StashAway. According to JP Morgan's analysis, they look at about a period of 25 years for the S&P 500. If you just miss the best 10 days in that 25-year period, the average return for tracking the S&P will go down from 9.8% to about 6.3%.
Yeah.
You lose a third of your return just by timing the 10 days wrong.
Yes, 10 days. And
it's still better to go through the best
Right.
days and the worst days, and you end up with 9.8. But if you because you time it and you miss the 10 best days, that goes down to 6.3.
I think this already tells the story. I know where you're going, but
if you miss the next 10 best days,
Right.
it goes down to 3.1.
Yeah.
Right. So that is a very good lesson that we always draw on, because it simply demand you to have an investment plan. If you're worried, you should really step back and think, what is my plan? Am I a lump sum investor? If you are, all your net worth's in the market today, you should. If you're worried, you should review your risk level, right?
Yeah.
Bring it down if you're worried and sleep better.
Yep.
But if you have a plan that sort of invests savings in a systematic manner on a monthly basis, that doesn't change. When the market is down, you're very happily buying more units with the same amount of money. So it really goes back down to your investment plan and how you invest.
Yeah, no, absolutely. Thanks, Freddy. I think I was hopefully quite clear on that topic, which I know there's always questions, especially with the media ramping up the statements always when it's just there, right? We hear it everywhere on CNBC, Bloomberg, anywhere, right? Anyways, if you have any additional questions on that topic or any other topics, feel free to put them down below in the commentary box, or email us at support@stashaway.com. You can also call us at any time during the business hours, and we'll happily discuss those with you. Otherwise, have a wonderful day, and we'll be with you again next week. Thank you.
Ciao.
Ciao.